There's a hidden pattern in the market that most traders overlook, and today, I'm going to expose it all. A simple pullback strategy that once you start seeing it, will change the way you approach every trade from now on. But here's the thing. The real secret isn't just in the setup, it's in how you apply it to the market. So stay locked in until the end, because I'm revealing game-changing tips you won't want to miss. And hey, if you happen to find value along the way, drop a like, subscribe, and turn on the notification bell to get notified when we upload a new video. It really helps the channel grow. Now let's dive into the strategy. So let's kick things off with the basics. Now, what exactly is a pullback? A pullback is simply a temporary correction or retracement that occurs within an existing trend. But why is it so important to understand? Imagine this. The market is currently in an uptrend, and you're looking for a buying opportunity. If you're an experienced trader, you'll know that trends rarely move straight up without any interruption. Most trends actually move in a series of higher highs and pullbacks. So if you enter a trade while the market is making higher highs, there's always a risk that a pullback or even a full trend reversal could occur. Instead of taking that unnecessary risk, it's much safer to wait for a pullback to happen first before entering a position. That way, you're essentially buying the trend at a much lower risk point. Now, I know what you might be wondering. How can you tell if the pullback is about to end and not just continue falling? Well, after a lot of research, I discovered that there are 3 common areas where pullbacks often end. The first level is the classic support and resistance zones. Let me show you a clear example. Over on the left, you'll see the price getting rejected multiple times, establishing a strong resistance area. Later, the price broke above that resistance and pulled back, and you could notice exactly where the pullback stopped. The previous resistance turned into new support. After that, the price pushed even higher, pulled back once again, and guess where it ended? Right at that same support level. This principle also applies perfectly in downtrends too. It's a simple but powerful concept. Next, the second common pullback level is the trend line. Take a look at this chart. We spotted a downtrend, so we drew a trend line connecting multiple price rejections above. Notice how prices repeatedly pulled back to this trend line and then dropped lower? That's another clear example of the market respecting a key level during a pullback. Now, moving on to the third pullback area, which is the moving average. In this chart, we've identified an uptrend and applied the 50-period moving average as our key dynamic support. Remember, we use the 50-period here because it matches how the market has reacted historically. In different markets, you might use the 20, 100, or even 200 period. You need to adapt to what the market respects. As you can see, the price pulled back towards the moving average, then moved higher, again and again. This highlights how moving averages can act as dynamic support or resistance during pullbacks. But what's even more interesting is when multiple levels align at the same spot. Here's a great example. The 50-period moving average lines up with a horizontal support zone, creating what we call a high-confluence area. When price approaches such a confluence, there's a much higher chance of a strong reversal forming. But caution, you shouldn't just blindly jump in when the price reaches these levels. Why? Because prices can still easily break through them. That's why you need strong confirmation before entering a trade. One of the best confirmation techniques we can use is candlestick patterns. Now, let's show an example to make this crystal clear. But before that, let's check out the Batunix Exchange. So, if you're serious about stacking wins in this market, you cannot afford to sleep on Batunix, the exchange that's blowing up for all the right reasons. Everything you need is right here. Instant access to spot trading, futures trading, copy trading, and even bonuses for new users. It's like having a Wall Street-grade trading floor, but right in your pocket. In the market section, you're spoiled for different choice. Bitcoin, Ethereum, hundreds of altcoins and meme coins, you name it. Prices update in real time with no lag and no delay. Depositing is super simple. Just head to the wallet section, select Deposit, choose your crypto and scan the QR code or copy your address. Funds usually show up within seconds or minutes, making it one of the fastest deposit systems out there. And here's where it gets juicy. The futures trading. Leverage up to 125x for the real traders. You can set your strategy with limit, market, or trigger orders, adjust your leverage on the fly, and stay in full control with clear P and L tracking. It's fast, it's fierce, it's built for winners. Why Batunix, you might be asking? Well, you will get rock-solid security when you start using Batunix Exchange. Stupid low fees, that will allow you to keep your profits. Lightning-fast trade execution. 24/7 customer support that actually cares, and massive rewards programs dropping all the time. And yo, Batunix isn't just playing the short game. They've got staking, launch pads, new projects cooking behind the scenes. Meaning, if you're here early, you're getting in before the next big wave. So why wait, when the future of trading is already here? So, click on the link in the description below to sign up now, grab your bonuses, and let's dominate these markets together. Batunix Crypto Exchange is where traders are made and legends are born. Now let's move back to the video. Now, take a look at this current downtrend. The price is forming lower highs and lower lows. We've applied the 50-period moving average and marked a key resistance zone, creating another high confluence area. As the price pulls back towards this area, we wait for signs of rejection. And here we spot a bearish engulfing candlestick pattern. The bearish engulfing shows that initially buyers pushed the price up, forming a green candle, but sellers took over strongly, pushing the price down past the previous candle's open. This signals strong selling pressure. For even stronger confirmation, wait for the next candle, in this case, a big red candle, before taking a short position. Let's see another example. Over here we have a resistance area where the price was rejected multiple times. After breaking through, the price made a pullback. To confirm the continuation, we look for a rejection, and we get a hammer candlestick, where the long bottom wick shows buyers stepping in heavily after sellers tried to push it down. The hammer pattern tells us that there's strong buying pressure at the key support. To further confirm this, the next candle was a big green candle, a perfect signal to enter a long position. So, the key takeaway here is to find candlestick patterns that clearly signal rejection at important levels. Now, another powerful confirmation technique is the break of a trend line. And here's how it works. In this downtrend, we draw a main trend line and spot a pullback. We then draw a smaller trend line across the pullback itself. Once the price breaks the smaller trend line, that's your signal to enter a sell position. Here's another case. In this uptrend, we have a support trend line below and a resistance level above forming a confluence. As price pulls back towards this area, we draw a smaller trend line over the pullback. When price breaks the smaller trend line, that's your green light to take a buy entry. However, if the setup doesn't suit a trend line breakout, don't force it. Instead, rely on other confirmation techniques. Finally, another highly effective confirmation tool is the RSI indicator. But first, you will want to adjust the RSI settings by changing both values to 50, which gives you a single center line. Much easier for this strategy. Here's an example with EUR/USD. We spot a key resistance where price was rejected multiple times. After the breakout and pullback, to confirm a continuation upwards, we wait for the RSI to cross above the center line. And that's our cue for a long position. Another example. Here's a clear downtrend with the RSI applied. We identified resistance above and strong support below, creating another confluence area. As price pulls back, we watch for the RSI to cross below the center line. And that gives us a great shorting opportunity. So there you have it. A simple but powerful pullback trading strategy you can start using right now. Go ahead and join our Telegram channel and get access to high-quality, expert-curated trade signals every single week. But that's just the beginning. For those who want even more, our VIP signal channel delivers the most premium signals with even higher accuracy and more frequent trade opportunities. Don't settle for average trades. Join a community that wins consistently, so click on the link in the description below to join now and start capitalizing on the market like a pro. If you found value in this breakdown, do me a favor. Hit that like button and subscribe to the channel. Your support helps us to keep sharing these advanced trading insights on YouTube. Still have questions? Drop them in the comments and I'll personally help you out. And stay tuned, I've got another powerful concept coming up in the next video to take your trading even further. Until then, trade smart, stay disciplined, and keep learning.